Welcome back to Real Estate 101. Today we're going to continue our discussion on tax law and talk a little bit about tax fraud, and I'm pleased to be joined once again by Eldad Gerb of Devry Smith Frank LLP. Eldad, welcome back to the show.
Thanks for having me, Joe.
Okay, Eldad, so what are the top 5 tax frauds going on right now?
Well, the top 5, according to the CRA, are number 1, Rsp fraud, number 2, charity fraud, number 3, natural person fraud. It's an exotic one. Number 4 has to do with precious metals, and the last one has to do with business losses for individuals.
Okay, so what are the consequences of getting involved in a tax scheme here in Canada?
Well, the tax frauds are really directed at a couple of individuals in particular. So if you're a self-employed, like a real estate agent as you are, you're less likely to encounter fraud. And why is that? Because as a self-employed, you pay tax at the end of the year, whereas me as a staff attorney, or just any staff member, think General Motors, Ford, TTC, anybody who's an employee, or a union, any environment like this, or a T4 employee, they pay their tax up front when they earn it throughout the year. So a fraudster knows that, and what they're trying to do is go back and unlock all of that money that's already been paid to the CRA.
Okay, so we understand obviously who is more susceptible, but what are the consequences?
So the consequences is you're gonna have to go back and pay the tax back that was fraudulently taken away. You're gonna pay penalties, you're gonna pay interest, and in some of the particular frauds which we'll discuss, there are penalties within the financial instrument. So penalties that can come from banks or other financial institutions. So it could be quite expensive. You lose all of your upfront money, and then on top of that, another double. So another 50 or 100% on top of the fraudulent investment.
All right, so let's go back a little bit. You mentioned natural versus legal person. Explain the differences on that.
Well, the short answer is that it's nonsense. But the idea being, somebody comes to you and says that you as a person are flesh and blood. And that is separate, Joe, the flesh and blood person, from Joe, the legal entity. So Joe, the flesh and blood, does not owe any tax. So you should therefore file your tax returns as if you don't owe any tax. And so let's say you're an employee who earns $60,000 and you've paid $15,000 or $18,000 in tax throughout the year. They will prepare you tax returns that suggest that you don't actually owe anything because you, the flesh and blood Joe, is different from you, the legal entity Joe. I mean, it's literally nonsense.
All right, sounds like it.
But it's gotten people in a lot of trouble. So they end up having the tax taken away from them, or they receive a tax return on these new filed forms. The government comes back, and the government has prosecuted, in the last few weeks, there have been dozens of cases that have been heard before the tax court. And the tax court has also come out and said at length that this is nonsense and that we as Canadians, as people, as part of a normal and just society, we pay tax, it's a self-assessment system, and that this dichotomy, as it were, there is no such thing as Joe, the legal person, versus Joe, the flesh and blood. And they literally do things like they will have you write your name down in capital letters and say that it means something different from you writing your name in lowercase. Like, I mean, it's really out there, but the people who are doing it are just looking to take advantage of some sort of tax shelter and to reduce their tax burden because they're typically in a bind. So that's how we arrive at the flesh and blood versus the legal person.
All right, so you mentioned Rrsp. Tell us a little bit about the Rsp tax scam.
So the Rsp tax scam is actually, in my opinion, the worst because it's preying on older people. So people who have an Rsp built up, so it's typically somebody who's 50 or 60 years old, but not yet there that they can draw on that money. So the money is locked. So the fraudster has to design a plan to get this money unlocked. Now, you can only take it out for your, as you know, your first new house purchase and for continuing education. So the fraudster is going to design something that looks incredibly professional and advise them that they have a new security that has been approved by the Canadian government, and they're going to provide all these independent documents in the promotional literature that says they can take the money out. So there's a lot of consequences. Typically, there's a penalty right away for taking it out of the Rrsp. Then you have to include it in your income. So if you take $50,000 out to invest it, that $50,000 will typically come with about 40% tax. So right away, there's another 20 liability. Now that whole 50 is also going to have a 50% penalty attributed to it. So you're now at 50 that you have to put that you no longer have in your retirement, plus 20 as the tax on the 50, plus another 25 as the penalty on the 50. So you're now behind 95,000 and don't have that money for when you actually retire. So it's a very dangerous scheme. Approximately 5,000 people have already been reassessed in the order of, so regular individual good honest taxpayers, to the tune of $250 million that the government has identified as Rsp fraud, which, as you can imagine, is very scary.
All right, so let's talk a little bit about the losses that you mentioned, the tax scheme, I guess you would say.
So they're business losses. So what they say is basically they come up to an individual and they say, look, there's a big difference between the corporations, and these corporations all around the world don't pay tax or very little tax, and you, the innocent little guy who pays tons of tax. Well, that doesn't seem fair. I'm going to design a program for you. I will fill out your, whether it's T5001s, T4As, pension income returns, securities income returns, T2125s, partnership income returns. They come at you with all these CRA documents, and they say, well, your personal household expenses should be, as long as you 1% of the time have some kind of a hobby business on the side, you can write off all these expenses. Well, that couldn't be further from the truth. The other way they'll tell you is that you invest a little bit up front and there's some silent partner. So you invest $10,000, the silent partner into this big business, let's say it's going to be into car parts or something very believable oftentimes, or into some kind of security or real estate deal. They use real estate, and unfortunately in your area, you know, I have a parcel of land to sell you in Saskatchewan, as they say. So they use real estate and say, okay, you invest $10,000 and we're going to have these other investors, basically nobody, invest another 100. Well, now when you do expenses against all these other investors and we divide it up between everybody, your $10,000 that you invested now has a $50,000 loss. Well, $50,000 loss on a T4 income employee who makes 50 or 60,000.
That's a nice refund.
And shows that's exactly it. So now 100% of the money you earned in your honest 9-to-5 job that you work hard at is matched by the business loss. And when it's matched by the business loss, all of the tax that you pay throughout the year is refunded to you. And there is your business loss fraud.
All right, so let's talk a little bit about the charitable donation receipts tax scheme that people seem to be using more and more nowadays.
So this one is another scary one because of the person's intent at the time. Somebody's actually trying to do something good. So you're either investing in children or in illness or in religion or a very positive cause, trying to do better for society. What I can tell you from the charity frauds that are on my desk, from the people that have come across it, never sign a check to a name that's not the charity. So let's pick on the Kidney Foundation. If somebody approaches you and says, I'm doing something for the Kidney Foundation, I'm going to donate software, children's programs, or whatever it is. I'm going to buy it wholesale for $10,000, but because it's worth retail $50,000, here's a tax receipt for $50,000. But don't write the check, Joe, to the Kidney Foundation. Write it to 123 Corporation, because 123 Corporation is going to be the person who buys all the software and then donates it after the fact. Well, I can tell you right away, 123 Corporation is not a charity, and they should not be issuing charity receipts, nor should they be issuing charity receipts in amounts that are in excess of whatever you donated. You wrote a receipt or you made a donation of $10, you should get a receipt for $10. So it's very easy to spot. The other thing I would recommend that your clients do, or anybody watching this for that matter, is just call the CRA. They have a legal and up-to-the-minute, up-to-date list of who is a valid charity, and never write a check or make a donation to anybody who is not on that list. So it's too easy to find out who is a valid charity to be caught by one of these schemes.
Okay, and to further that, any legal valid charity here in Ontario or Canada, they have to be registered with the government.
They have to be registered with the CRA, and that's why you can call the CRA. There's a charity directorate. There's a phone number. It's pretty easy to Google. You get that phone number, you make a call before you make that donation, because you might have very valid reasons you want to give $2,000. And it might also be the case that you're not giving cash. Maybe you're donating a piano because the Kidney Foundation is opening a new center, whatever.
Yeah.
So you don't know all the rules around receipting. You don't donate pianos or other big fixed items every day. It's better to call the CRA, get the answer directly from the source before making that donation.
All right, so what about the precious metals that you discussed, or high-end collectibles?
So this one, it's sad that this one makes the list, because this is sort of a scam that's as old as time. They tell you that they've got these gold bullion bars somewhere in the world, and they're very precious, and there's very few of them, and they're very high to reach. Now, what do these things all mean? There's no market for it, or it's away from a public market. It means they're in control of all the information, they're holding on to it, you never see it, you never touch it. I imagine that all of the documentation that goes with it, with respect to insurance and authenticity, are probably all doctored and fake.
All right.
So the whole scam, it's sad that it's not just a tax fraud, it's a proper financial fraud across the board. And people are using it more and more, saying, look, we can make a quick turnaround, a quick big profit. All of these should scare you off, because just look at it a different way. If I told you I had a great investment and we could make 10% a year, you'd think to yourself, wow, that's pretty amazing.
It's a good return, yeah.
That sounds like a pretty good return if I have some security and so on and so forth. Well, put that on a continuum with the investment that returns to you 150% in 2 months. Well, obviously it's fraud. It goes to the sort of the age-old adage that if it's too good to be true, it probably is.
All right, Eldad, so any last tips for viewers of our show that may think they were involved in a tax fraud?
Certainly. If you feel like you've been involved in a tax fraud, please give me a call. I have every one of these frauds on my desk, and I'd be happy to help.
Perfect. Thanks, Eldad. Thanks for coming on today's show. I'm looking forward to seeing you again sometime down the road.
Thanks again for having me, Joe.
So there you have it. If you need the help of a top tax lawyer, get in contact with Eldad Gerb of Devry Smith Frank LLP. I'm your host, Joe Terceira. Thanks for watching, and we'll see you next time.